What's up? In this tutorial I want to explain how you can use divergences in trading. I will show you some examples of divergences, and over here you can see I have the Bitcoin chart, so I'll give a few examples on this chart. But before I go into that, I first want to explain what divergences are, and over here you can see an overview of different types of divergences that you have. So I will walk you through one by one. So the first one, over here you can see the bullish divergences. So that is on the left, and on the right side you have the bearish divergences, as you can see over here. So the first one, this is a regular bullish divergence, is when you see the price action is going down but the oscillator is going up. And as you can see over here at this chart, I have two indicators loaded. The first one is the RSI and the second one is the MACD, and you can use those to spot divergences. But there are also many other oscillators out there that you can use to spot divergences, but these two are commonly used. So for this example I will show them, and I also use them for my own trading strategies. So I will show you an example of a regular strong bullish divergence in a couple of seconds, but first let me go over to this one. Over here you have the medium bullish divergence. You can see the price action stays on the same level basically, so it touches 2 points at the same level, but you see the oscillator making an upward direction, so that means it's a medium bullish divergence. Then you also have a weak bullish divergence, and that is when the price action is going down but the oscillator stays on the same level, so it doesn't make a lower low but the price action does. So that is called a weak bullish divergence. And then you also have an hidden bullish divergence, and that is when the price action is making an uptrend and the oscillator is going down. So that is called a hidden bullish divergence. Then you also have bearish divergences, of course. So a strong bearish divergence is when the price action is going up and the oscillator is going down. So that is called a strong bearish divergence. And a medium bearish divergence is when the price action touches points on the same level but the oscillator is making a lower low. And a weak bearish divergence is when the price action is going up and the oscillator touches points on the same level. And the last one is the hidden bearish divergence, and that is when the price action is going down and you see the oscillator is going up. So that is called a hidden bearish divergence. Now let me go over to TradingView. I have done some preparation, so I will show the drawings that I have. So now you can see, and this is, by the way, this is the daily Bitcoin chart. As you can see, BTC USD on the daily time frame. So I will go over to the point back when we were at the highest point. So that was this one over here, $68,000. And as you can see, I'll have to make sure this is right. You can see over here that the price action is going up, and you see that the RSI is making a lower low, and you also see it for the MACD. And you can use those histogram bars. So you see those is going down, RSI is going down, but the price action is going up. So this is a regular bearish divergence, and what you see, we all know what happened after that. You can see the price action is crashing down. The rest is history. So a tip I want to give you to spot divergences easily is not to use candles, but you can use the line chart. And in another tutorial I have explained how you can set up the line chart, what the line chart is, what the benefits are. But one of those benefits is mainly spot divergences. So select the line chart, go back to this point, and now you can see clearly that the price action is making a higher high. This, for some reason, the drawings doesn't stay at the same point when I switch charts, but doesn't matter. You can see price action going up, this going down, this going down, price action going down. Over here I will zoom in a little bit. You can see a small bullish divergence. So that is when the price action is going down, but you see the oscillator was going up, and that also was the case for the histogram bars of the MACD. So those were going up, RSI going up, but the price action was going down, and after that you can see a small pump to this point. Next example is a hidden bearish divergence, and that is over a longer period. You can see clearly that the price action is going down. If you measure from this point to this point, but you can see over here that, I should draw it, that the price action over here was going up. I need to make that red because it was a bearish divergence. So you can see that the price action was going down, oscillator was going up, in this case the RSI, and you can see that the MACD also doesn't make the downtrend. So that means a hidden bearish divergence. And what happened after that, you can see price action coming down till this point. Next example is a regular bearish divergence, and you can see from this point until this point the price action was clearly going up. On the RSI you didn't see the divergence, so sometimes it's the case that, just like in this example, that the RSI doesn't matches the divergence, but you can see clearly on the MACD that the oscillator was going down. So this is going up, this is going down, and that means that you have a bearish divergence, and after that you can see that the price dropped all the way till this point. And another tip I want to give you is how you can easily draw the divergences for the MACD histogram bar is look at the last green candle that has a bright green color, and then search for the next bright green color and draw a line from the last green candle to the next green candle and see what the price action does. And it doesn't always happen straight away, so sometimes it goes over a longer period, but it's a quick tip that I want to give you. So next example is a bullish divergence. Let me make sure to draw this right. So what you see over here is that the price action basically remained on the same level. So this basically is a straight line, and you can clearly see that the RSI was making an upwards direction also for the MACD. So that is called a bullish divergence. You can see a small pump, so it doesn't always predict the huge pumps. Sometimes it also can be a small pump, but it happened over here. Next example is a bearish divergence. You can see over here that the price action is making higher highs, so it's an upwards direction. You can also see that this doesn't confirm a divergence, but if you go to the histogram of the MACD, then you can see clearly that it has a downwards direction, and that means it's a regular bearish divergence. So you can see over here price dropped. And the next example I want to give you is the bullish divergence again. You can see that the price action made a lower low while the RSI made a higher high. So after that, price action was going up a little bit. And next example is a large hidden bearish divergence. As you can see over here, the price action is going down, but over here on the RSI you can see that this is going up. You can see it clearly. Price action going down, price action going up, and after that a big drop. And this was also a double bearish divergence confirmation, because over the longer period we have the hidden bearish divergence, but if you look at the smaller period, I will remove so you can see it better. You can see that, let me put the text on the top so this is better. You can see clearly that the price action was making a higher high, but over here on the RSI you can see that it was going downwards, and also the MACD histogram confirms that it was going down, so that means a bearish divergence. And after that you can clearly see a big price drop all the way till this point. And the last example I want to give you, you can see that the price action was clearly going down while the RSI confirmed an uptrend, and also the MACD, the histogram, was going up. So that is a bullish divergence, and after that you can see price going up all the way to this point. I hope that this video gave you some good examples on how you can spot divergences. It's very useful if you're trading, and you can use it for any pair that you like to trade on. So for example crypto, but also stocks, forex, you name it. So make sure to get familiar with spotting divergences, how you can use it. Always make sure, especially in the beginning, when you don't know all the type of divergences yet, make sure to use this. You can download it, you can search for it on the internet. It's very easy to find. Just Google it, divergences, then you see something like this, and then you can easily check what type of divergence you're spotting on the chart. So it will definitely help you to become a better trader. So I hope this tutorial was helpful. If that's the case, make sure to let me know in the comment section. Also make sure to subscribe to the channel. And of course, if you want to stay up to date on new videos that I will be uploading, make sure to hit the notification bell, and a lot of more content is coming out. Thank you for watching. I hope you have a nice day, and I'll see you back again in the next video.